Respected XRP holders, you need to listen to this right now. What I am about to tell you could change how you see the market and your future with XRP. This is not normal news. This is insider-style insight that big funds, banks, and smart money are watching right now. Stay with me because what I reveal could be the most important update you hear all year. And yes, be sure to like and subscribe so you never miss updates like this. You do not want to miss a single word. Today, we are talking about something huge that affects every single person holding XRP. The market is shifting fast. Big players are moving in ways most people do not see. Think about institutions like BlackRock, big banks, and even global groups like the IMF. When these heavyweights make moves, markets shake, and XRP is no exception. There is new data, new trends, new flows of money that are only now becoming visible. If you are serious about XRP, you must understand this. First, let's talk about the big picture. XRP is not just another token, it has real use cases in payments. Banks and payment networks already test and use Ripple's technology. That means when big money flows, it sees XRP differently from other coins. Now, recent patterns show institutions adjusting their positions, and this could be a sign of something bigger coming. We see volume changes that do not match normal retail action. When big wallets move, markets feel it. Smart money rarely tells you what they are doing. But we can track patterns, and right now those patterns are telling us something. You have probably heard about the legal front with the SEC before. That story changed crypto rulebooks. But right now, there are whispers in the market about new developments that could impact XRP's status even more. Some insiders suggest that regulators and major financial firms are discussing frameworks that could bring clarity to digital assets, and XRP could benefit. This is the talk inside closed circles. When regulators and big financial firms start talking, markets listen. Next, we are seeing a shift in how wallets are behaving. Large holders, sometimes called whales, are not selling. They are accumulating. That means these big holders are choosing to hold stronger positions instead of taking profits. Why? Because they may be expecting something big. Maybe it is news. Maybe it is market structure changing. But they are not acting like people who think the market is going down. They are acting like people who think something big is coming. Now let's add another layer. Some analysts believe that global financial firms are adjusting how they view digital assets. They are no longer seeing them as fringe. Groups like BlackRock have launched crypto-related products before, and they look at regulatory clarity as a key to bigger adoption. If regulators give clearer rules, big funds could start moving even more capital into assets they trust. XRP, with its focus on cross-border payments, could be on that radar. But here is the twist most people miss. This is not just about price. This is about utility. XRP has a network effect. More financial institutions testing and using it increases real-world demand. That demand can be stronger than hype. For example, if more banks adopt Ripple's solutions to move money faster and cheaper, that is real use. That is real volume. And real volume matters far more than social media buzz. You might be thinking, what about the short-term market moves? Yes, markets move up and down. But right now, the signals from wallets, exchanges, and big investors suggest that sideways or small pullbacks are being absorbed quickly. That tells us bulls are still present. It tells us that people who matter are confident, or at least cautious, but not fearful. Fear disappears when big holders start selling. But that is not happening right now. Let me tell you about another trend many overlook. Liquidity is tightening. When liquidity tightens, prices can move faster with smaller flows. That creates volatility. But volatility in the right direction can lead to major moves. This is exactly why some analysts say we might be in a calm before the storm. A storm that could make the next phase much bigger than the last. Also, pay attention to global payment trends. Cross-border money movement is a massive market. Traditional systems are slow and expensive. XRP's design is focused on solving these issues. This is not small. This could be why major banks are quietly testing. When real pain points exist, solutions with network backing get attention. Now let's talk about timing. Some people think XRP moves only on hype. That is false. It moves on real activity and big money flows. When institutions lock in positions, they do it based on strategy and analysis, not hype videos. What we are seeing now could be a sign that the next major move starts from the ground up, not the top down. This is not financial advice. I am sharing insights based on patterns, data, and behavior in the market. Your decisions are yours, but ignoring what big holders, institutions, and regulators are signaling would be a mistake, especially if you hold XRP for the long term and want to understand what could be coming next. So here is what you should watch next. Watch wallet flows, watch institutional interest, watch regulatory signals. These are far more powerful than any social media trend. Big money moves quietly, and right now there is movement under the surface that many miss. If you found this video helpful, remember to hit like and subscribe. More updates like this are coming, and you will want to stay informed. XRP holders deserve clarity, and I promise to bring you the best insights I can find. Stay alert, stay informed, and I will see you in the next update. Let's keep going because this next part is where most people miss the real story. Right now, the world is talking about crypto like it is something new, but big banks do not see it that way. They see it as the future of money movement. When you move money across borders with traditional systems, it is slow and costly. XRP was created to fix that problem. That is real value. That means if big companies adopt it, they use it because it saves time and money. That is not hype. That is real business logic. And when real business logic enters the picture, prices can follow real demand, not just social media noise. Now let's dig into something huge that could be a game changer. Think about global cash reserves and how countries manage money. Many countries want faster cross-border settlement. They do not want to wait days. They want near instant. When countries talk about this, Ripple's tech shows up in those conversations. You may not see headlines about it, but insiders hear this. That means if even a few countries adopt solutions tied to XRP, the demand could grow far bigger than any past cycle. Remember, earlier cycles were mostly retail-driven. What we are talking about here is institutional and sovereign interest. That is a different level of demand. Next, we need to talk about the psychology of holders. Most people buy when the price goes up, but smart holders buy when the price is calm or even down. Right now, many smart holders are adding to positions quietly. They are not talking about it. They are just stacking. That matters because markets move when supply gets tighter. Less supply means even small buys can push prices higher. That is basic economics. But most people look only at the price chart and miss the underlying demand trends that cause those moves. Also, there's the topic of exchange listings and liquidity. When XRP is available on more trading platforms, that increases access. More access means more traders can enter. But the deeper pools of liquidity come when big funds allocate money to XRP through OTC desks and institutional channels. That means they do not trade on public exchanges only. They trade with brokers. That moves big sums without showing up immediately on exchange order books. If that is happening, the exchange numbers only tell part of the story. The real money could be moving quietly behind the scenes. Another point many overlook is the role of developers and network upgrades. When a network improves, it becomes stronger. Strong networks attract more users. More users create more volume. More volume creates demand. It is a positive cycle. Some projects promise upgrades but never deliver. XRP has a history of working with partners and improving infrastructure. When partners see reliability, they trust the network more. That trust is valuable. That trust is what big companies look for before they allocate major capital. Let's talk about regulation again, because this is a big piece that many people misunderstand. Regulations do not have to be perfect to create opportunity. All they need to do is create clarity. When rules are clear, big institutions can act without fear. They can invest without worrying about legal risks. Right now, regulators around the world are working on digital asset frameworks. Some are closer than others. If even a few major economies release clear rules that recognize XRP in a positive way, funds that were waiting on the sidelines could suddenly jump in. That could bring fresh capital into the space. And that is when markets can surprise everyone. It is also important to look at global payment needs. Billions of dollars move across borders every day. Traditional rails are slow. They cost money. Businesses want faster and cheaper options. XRP's model is designed for exactly that. When businesses adopt solutions connected to XRP's technology, that creates real-world demand. And real-world demand is stronger than speculation alone. Speculation goes up and down. Real demand grows steadily over time. Now, I want you to think about something most people ignore: the timing of cycles. Many believe markets move randomly. That is not true. Markets move in cycles, driven by psychology and capital flows. Right now, we could be in a quiet phase before the next big wave. Quiet phases confuse most holders because nothing exciting seems to happen. But smart holders know that the quiet phase is where big holders stack and prepare for the next leg. That preparation could make the next move far bigger than the last one. If that happens, it won't be just a short pump. It could be a major trend shift. Another thing to consider is global economic pressure. When economies face inflation, slower growth, or banking stress, people look for alternatives. Some see digital assets as a hedge. Not everyone will, but enough people looking for alternatives can drive demand. XRP, with its focus on global payments, could benefit from this trend. It is not about replacing fiat money. It is about making money movement faster and cheaper. That niche alone could attract major capital over time. Now let's talk about what you can do as an XRP holder. First, stay informed. Do not rely on rumors or fear. Look for data. Watch whale activity. Track regulated institutional interest. These things matter more than random price predictions. Second, understand your own strategy. Are you holding long-term because you believe in the technology? Are you watching short-term for trades? Know your risk. And remember, real holders think long-term. They think about adoption and real use cases, not just price charts. I want you to imagine what could happen if even a small portion of global payment volume moved through systems tied to XRP solutions. The demand could multiply. We are not talking fantasy. We are talking about real businesses wanting better tools. When the market sees real demand, prices can reflect that demand. Speculation might start it, but real use case sustains it. So remember, XRP holders, this is not just another video. This is your chance to understand the hidden dynamics shaping the future. Big players are watching, institutions are moving, regulators are talking, and smart holders are positioning quietly. If you stay educated, stay calm, and pay attention to real signals, you could be ahead of the crowd when the next big chapter begins. Thank you for staying with me. If this helped you see things clearer, hit that like button and subscribe for more insider-style updates like this. I will keep bringing you the latest and most important insights I can find. Stay sharp, stay confident, and I will catch you in the next deep update. Now, let's get even deeper because this is where the story gets truly interesting. One thing most people ignore is the timing of corporate adoption. Big companies and banks do not announce every move publicly. They often start with pilots, small tests, and internal integrations. XRP has been quietly part of some of these pilot programs. That means when the news finally hits mainstream media, the market may already have absorbed months of behind-the-scenes adoption. If you are watching only headlines, you are already behind. That is why understanding patterns, wallet activity, and institutional flows is crucial. Those are the real signals. Another layer you need to consider is global partnerships. Ripple does not operate in isolation. They partner with payment providers, fintech companies, and even traditional banks. Each partnership adds credibility and real-world usage. When multiple banks start testing or implementing solutions simultaneously, it creates a network effect. That means adoption grows faster than any hype cycle. Think of it as a ripple, pun intended, spreading across the financial world. And this ripple effect is exactly what could drive demand for XRP in ways that casual traders do not notice until it is too late to get in cheaply. Now, let's talk about wallets and accumulation patterns again, because this is where it gets really telling. When large holders accumulate, they are not looking for short-term gains. They are positioning for long-term moves. Data shows that large XRP wallets have been quietly increasing their holdings. These wallets often belong to institutions, hedge funds, or early adopters with deep insight into market dynamics. When these wallets act, it is like a quiet storm building strength under the surface. Retail traders rarely notice until the wave hits the exchanges, and by then price moves can be swift. We also need to mention regulatory clarity again, because it is one of the biggest catalysts for institutional money. The SEC and other global regulators are observing XRP closely. Positive guidance or acknowledgement from regulators could open the floodgates for institutions that have been waiting on the sidelines. Even a single statement confirming XRP's legitimacy as a payment-focused digital asset could trigger a surge in interest. The combination of clearer rules and adoption by credible institutions is what truly fuels sustainable growth, not short-lived hype or social media trends. Here's something few people talk about: liquidity concentration. XRP liquidity is not spread evenly across the market. Major holders control a significant portion of supply. That means any coordinated accumulation or redistribution can cause noticeable market moves. Understanding this helps explain why price may act differently than expected during normal trading hours. When supply is concentrated and demand starts growing, even small inflows can trigger large upward movements. Let's also look at global economic trends. Cross-border payments are huge. Billions of dollars move daily across countries. Traditional systems are slow, cumbersome, and expensive. XRP solves this. That is why banks and large payment providers continue to experiment with it. When they start implementing it seriously, the demand grows beyond retail speculation. It becomes real usage, and real usage always has longer-lasting impact on markets. Now, timing is everything. Many XRP holders panic during small dips, thinking the market is collapsing. But these small dips often act as accumulation windows for big holders. Smart money does not buy at the top. They wait, they stack, and they prepare. That quiet accumulation period is critical. It is like a pressure cooker building before the release. When the market finally moves, it can be sudden, strong, and lasting. Another point to keep in mind is news cycles. Most headlines focus on hype or short-term price swings. But the truly important developments, partnerships, institutional tests, and regulatory shifts often do not make the front page. This is where having the right insight matters. Those who watch wallet flows, large trades, and institutional behavior often get early signals before mainstream media reports anything. Finally, think long-term. XRP is not just a coin to trade for quick profits. It is a tool with real-world applications. Cross-border payments, fast settlements, lower costs, these are problems XRP was built to solve. Every adoption milestone, every bank pilot, and every regulatory clarification increases its real-world value. That is the story most people overlook when they focus only on charts or hype. So XRP holders, stay vigilant, watch large wallets, follow regulatory updates, track adoption news, and never underestimate the quiet accumulation happening under the surface. This is the hidden story that could set the stage for the next major move. The market may look calm now, but beneath the surface, momentum is quietly building. If you are serious about staying ahead, hit that like button, subscribe, and turn on notifications. I will continue bringing you the most critical insights about XRP that most people miss. Stay alert, stay informed, and remember, real opportunities often come quietly before everyone else notices. The next chapter for XRP could be the biggest one yet, and you want to be ready when it unfolds.